Hey traders, welcome to Charts and Big Mugs of Coffee. Although sadly today I have to admit I have single-handedly made maybe the worst cup of coffee I've made in a while, completely user error. We'll have to fix that before we get to Powell today at 10. Yes, here comes day 2 of Jerome Powell. And we saw what happened yesterday. And for those of you that were in the Sector Secrets room, you knew what the plan was. We built the watch list on Tuesday, and then we looked for the levels to be reached on the volatility of Powell yesterday. And it's going to be a very similar thing today. Overall, we continue to look for Powell to create those pullbacks, right? So if for those of you that caught the Friday video where I said Powell pullbacks, that's exactly my game plan. Gang, trading requires homework, right? Trading requires finding a watch list of high probability names and then taking our great tools, taking our indicators and our strategies and applying them to symbols that have the best chance of following through. And that's still very much rooted in tech. There are some up and comers. If we're going to see a surge in things like the lagging corners of the broader averages, healthcare and financials, that will likely come if, and that's the big if, there's next week. So I'm already in sector rotation mode, right? Once we survive the minefield that is the 2 days of Humphrey Hawkins' testimony with Powell, once we survive that, which we are, I think we're actually not just surviving, but doing pretty well. Once we survive that, then we can move on to part 2 of all the fun and games of June. And that is getting into the sector rotation, whether there is some or any. In other words, what kind of allocation and reallocation do we see as the time horizon for money managers might be the second half of the year, or at least Q3, and how they want to be positioned based on whether or not Powell's going to hike in July, which is still the probability, although we still have, 4 weeks, 5 weeks, whatever it is, to that July 26 meeting. We have plenty of data along the way that Powell is going to have to use to justify whatever decision they make. So there's still a lot of uncertainty there. I still very much like a potential pullback opportunity, but day 1, day 2 of Powell, it is a two-part adventure. So we did not sling as many trades as possibly I wanted to yesterday. Today's going to be sort of the wrap up of that, and I'm looking to get more opportunities at the daily price movement ranges. So barring any mean reversions, what is a mean reversion? Well, the level to which we get a more significant pullback for me at the 34 EMA wave is probably still unlikely. However, daily price movement ranges are going to still be the focus. And again, we're going to deal with a brand new set of ranges. So again, gang, trading does require the homework. The homework is finding the watch list, which doesn't take a lot of time. It just takes a process, right? Then we wait for the levels, and then we enter our trades. And it is really those 3 parts, rinse and repeat, right? So we just embark on another day of this game of trading that we have all chosen to play. All right, so let's get to it. In terms of S&P NAS, a little heavier this morning. We did have the initial claims number. So let's look at that here for a moment. We had our 830 hot zones. Look at the initial reaction, shot up, and then we've sold off. So are we really seeing weakness into the open? Let's be frank. Are we really seeing weakness into the open? I mean, we're off the 6:37 a.m. lows. We have yet to really conquer 4,400 in a realistic way. I don't expect that level to be an easy one to regain traction above. And it's going to depend a lot on what Powell says. Is there anything new or shocking or more hawkish than we already believe is coming? Right. But, we're pretty much just treading water, which is what I would expect. Guillotine syndrome is a thing. Who wants to stick their neck out in front of day 2 of Powell's testimony in front of the House? And When we look at where we are right now, it's chop, it's range bound on the ES. We're really not going anywhere. And then let's crack open the NASDAQ, the reaction to the 830 hot zone. Again, very similar, shot straight up. And then in quick order, since 8:30 this morning, 36 minutes later, we've taken all that back. But it does seem we're still stuck in a range. So, there's no drama really unfolding. It's just a reaction to data, taking that back, and then seemingly we're marching back above possibly 4,400 on the ES, 15,000 on the NASDAQ. All right, that's where we sit this morning. Remember that when we look at things like bonds, this is usually sort of front running what we imagine the Federal Reserve is going to do 6 months from now. And right now, the pivot doesn't look as probable as it has in the last few months, right? This pivot of November looked pretty darn certain, right? Now it doesn't. Now we're maybe going to get a rate cut in December, but it's not certain. So if you think about what bonds are front running, at first, bond yields were going up on this hope that, or expectation, right? Hopes are for birthday cakes, on the expectation that possibly by December, we're going to start to see that Fed pivot after a few months of a pause. If we're going to pause, it'll likely be after July. There's no meeting in August, pause in September, pause in November, and maybe a cut in December. So why would yields be significantly lower when bond traders look out about 6 months ahead and say, yeah, we probably still don't have, at least right now, what we know, 100, think about it, 180 days away. But right now, we still don't see a clear path forward to those lower yields. Okay, and that's what the bonds are reflecting. I get a lot of questions about the dollar. Gang, the equity markets can rally without dollar weakness. They can. In fact, they have. They can and they have. But really, the major narrative in the near term is going to be the path to possibly what could be the last hike from the Federal Reserve. And then we pass the baton to the narrative that the ECB controls. The ECB is still midway. We can argue they're not done. They're not anywhere near the end, the home stretch of their tightening cycle. So that's where the euro is still likely going to have overall on a daily time frame. It will be supported, right? So that's dollar weakness generally and euro strength. So I'm talking about not a 5-minute time frame or even an hourly time frame. When we step back and look at the daily, buying support is still going to be better on the euro. Buying into shorting into resistance is still going to be better on the dollar. So that's where we are right now in terms of what we see, right? Not what we think, not what we feel, but what we see in terms of the data and the way price is reacting to it. All right. So that being said, again, just a reminder that Powell is up at 10 a.m. And that means we go through day 2 of volatility. We'll see what the dollar yields and the indices do with that. And with that, let's go ahead and jump into the questions. As always, phone lines are open for your requests. And we've got Home Depot here. All right. So when we take a look at Home Depot, let's move this intraday aside. We'll take a look at the 1 hour. We'll take a look at the daily. Those two time frames, 1 hour and daily, are my preferred time frames for short-term swings. And I mentioned short-term swings and not just swing trades because in previous years, swing trades could last weeks to months. That's not the environment we're in now. Swing trades right now could last 1 to 3 days. And a really great set of follow-through days for swings could be maybe 2 to 10, right? So we've shortened the time horizon of follow-through, and that's generally going to serve us better, being a little bit more vigilant about how much follow-through we can expect and limiting that, right? So Home Depot is not in a trend. Editor, of all the things that I could prioritize and all the symbols that we prioritize in the mastery, in our Sector Secrets mastery, Home Depot wasn't one of them. Not that it can't be a buy, but I would rather try to find names that trade with Home Depot, meaning at the sector level or the index level, that are trending. So I think the first question is always, why that symbol, right? That's what I always ask myself. Why Home Depot and why not, say, Lowe's, right? So I at least want to interject that. Home Depot is a buy as long as it trades down to either Darvis support or I would say a level closer to 296. 296, editors. That's what I'm looking at. All right, 6J. If I'm looking at the 6J, I'm looking at the yen. and I'm looking at the yen versus the US dollar. The yen is generally weaker against the dollar. The dollar has just been stronger than it. And if we have the S&P in an uptrend and the NASDAQ in an uptrend, which they are, right? It's not unusual for a carry currency. So the yen is most often the counterpart of the carry currency. Buy Aussie, sell yen. Buy New Zealand dollar, sell yen. Buy any currency of a central bank with a higher yield, higher interest rate than the yen, which is pretty much all the other major currencies. Yen continues to be weak, and I don't have any setup on the daily for a buy. If we're going to have a buy, Jimmy, I'd have to wait for either a day trade, oversold, support, or I'd have to wait for a 60-minute uptrend, or maybe the daily price movement range, which frankly, I'm nowhere near. So no, I don't have a buy longer term for the yen. And then near term, whether that be 5 or 60, I don't know at 9:12 in the morning whether that's going to reach it, but I do know where the levels are, right? So much like a great batter at the plate, what do the greatest batters know? The same thing that the greatest traders know, right? They know their zone. They know that all price action is every pitch for a batter one that we're going to swing at. Of course not, right? We've been to all the little leagues when the little ones are playing baseball and they're swinging at every pitch. Heck, they're sometimes swinging before the pitch is even over the plate, right? A lot of traders trade that way, sadly. What we know to do is we know exactly what pitch we want to take a swing at. And every trader has different pitches, right? So don't grade yourself against another trader's pitch. You know yours. And if an oversold buy on Home Depot is it, great. I'm going to say I'm waiting more for something like Lowe's and a trend following pullback. So does that make sense? And then when it comes to 6J, I'd rather be in a currency that is, if I'm going to be long, that's in some semblance of an uptrend, like the euro, or supported by a hawkish central bank, like the euro. But I will look for shorts overall on something like the yen, right? So the structure dictates the strategy. Yes? All right. Great questions. All right. Moving on to NVDA. We had some nice levels on NVDA. Let me show y'all something. I don't know that I have it up right now. So I was alluding to having a list, right? Doing the homework. And, I remember when I first started trading, the appeal was somehow this whole idea that, trading is easy and I'm just going to find a level and then I'm going to go have a picnic. Gang, days like this aren't going to work and markets like this are not going to work for that attitude. In fact, look, gang, we're going up against the best and the brightest and the most well-funded, right, out there when we are doing battle against hedge funds and institutions and banks and other traders, right? There is a certain competitive element to trading. And if you're not competitive, you're going to go ahead and make yourself believe that there is a world in which you just kind of find a few levels, put on a trade, and just walk out the door. This is not that market. Maybe 2020 was, right? 2020 probably worked out pretty well that way. In the real world, where trading is an amazing job, it does take time. It does take some homework, right? This is the kind of homework that we do, right? This is the kind of homework that we do. As one of my mentors said, if you want to phone in trading, Rod, go for it. But people out there who are treating it as a business and dedicating time to it because it is their profession, they'll take your money and they'll be happy to take your money. And so please keep that in mind, gang. This is what we did. We figured out our list, and then you'll see very specifically, we started to look at what levels have to be reached. Now, this was yesterday, right? The levels are going to be freshened up with new volatility levels today. So when I look at Tesla and NVIDIA, the reason I bring this up, Praveen, is look, these were on my list. I like those two symbols a lot. Yeah, so I'm with you. If we jump on over to NVDA, do I want to take a look at pullbacks towards, the gray zone of volatility support? Absolutely. It's just waiting there like that zone that we are wanting to take advantage of. So at 9:30, right? It's a little too soon right now, but at 9:30, I'll start looking at those zones and I'll see if we can trade down to them. Let me show you the 1 hour chart here, because this might be a really good alternative to those of you that want a quicker approach. We want to wait for those zones to appear. and then we'll head on down. This is what happened yesterday, just to give you an idea of what I'm looking for again today. This is what happened yesterday, right? Into the gray zone. There's your Powell pullback. And it needed some Dramamine, right? There's your Powell pullback. And then that's what we're looking for, those kinds of moves. So I don't have that on tap yet, Praveen, because I need to see what those zones are once the bell rings, once we get that volume and volatility and frankly, attention on the market, then we have our zones, right? Same thing on Tesla. Be careful with Tesla. Be careful with this one. I find that Tesla, even though it's going to be somewhat correlated to the S&P and the NASDAQ, a lot of us know, and I'm not a frequent trader of Tesla. I'm going to be really frank. I'm not. The idea that Tesla has to track with the NASDAQ and the S&P is not really true. Tesla has narratives that tend to supersede the influence from the index, and even the sector, it's in the XLY, tends to supersede that. So trading Tesla is a little bit like trading a stock on its own little island. And so keep that in mind. So I don't glom onto Tesla all that often, but I like NVIDIA a lot. It's tracking with the NAS, it's tracking with tech, and I like the structure. There's a good amount of correlation there. All right, so then next up, how come I don't use the prop dots anymore? Fogo, they're on my chart. There they are right there. Yeah, absolutely. Absolutely. I have the 200 propulsion that I'm using probably the most. Remember, Fogo, propulsion dots, which are a combination of a fast and slow exponential moving average, are fantastic in any environment that a moving average is fantastic in. And those are trends. And when we have trends that are clear and we don't have excessive volatility, price-based indicators that show support or resistance at a trend work great. But that's not the world that we're in right now, Fogo. So I still have them on my screen, absolutely. But I'm more discerning about which levels are realistic. Is an 8 exponential moving average likely to get run over? Absolutely. Is it 21 sometimes? Sure. So even the 34 is way out of reach. Frankly, the 21 is out of reach right now too. So what I'm doing is realizing that volatility is really the dominant factor in these current markets. Why? We're in the spin cycle. I mean, quite literally, throw the wash machine in the spin cycle. We're in the spin cycle of macroeconomic confusion, uncertainty, right? So that's where I'm going to rely on volatility a little bit more. But absolutely, I still have propulsion dots, grab candles. I'm still looking at my wave. I'm just being a lot more discerning about that process. All right, question from our training room. Dr. Bob asks, I read the Russell funds are reconstituting this Friday and that Meta is being moved back to the Russell Growth Index. Should that be a cause to buy Meta? So I would look at that as additional information, and additional information apart from the structure is going to be dangerous. Is Meta buyable? Absolutely. Meta's in an uptrend. So with or without the Russell narrative, it's buyable. If that's going to be one more reason to be bullish, fantastic. But even without that, Bob, I would be looking to buy Tesla on a dip. Yeah, absolutely. All right. The next question from our training room, Papillon asks, the sector secret slow stow, is the regular slow stow applied to a particular sector? No. So yeah, the name is a little confusing, right? I call it the sector slow stow because we use that exclusively in the sector secrets mastery. So it's not applied to a sector, although that's kind of a neat idea, but no, it's an overbought, oversold indicator that I've been using for 25 years. What is it? I'm happy to tell you all what it is. It's an exponential, slow stochastic, slow, that's the key. And then what the secret sauce is slowing it way down. Most traders use a stochastic that might be a 7 or 14 setting. It's a very short setting. I stretch mine way out to the 21. I've been using that one, like I said, for about 25 years, and it just works. So exponential, 21K 3D with an 80 overbought, 20 oversold, right? And it just works exceedingly well. It's the best overbought, oversold indicator that I have in terms of identifying those zones in CHOP. There are some interesting things that we can note when the slow stochastic passes down below the 80 and crosses the 50. Those are moments of momentum that we can use within a slow stochastic. So there is a very small window of a momentum confirmation in terms of prices continuing in a certain direction. But the most powerful levels are that 80-20. So that's what I use there. All right. So those are the settings. All right. Next up, Uh, iPod Touch asks, isn't the real story that QT quantitative tightening that is going on and not so much the rates? What's the difference? Seriously, what's the difference? Right? I mean, QT and the rates, right? Same thing. I don't think we're on different pages, my friend. Powell seems committed to ending QE and the ZERP policy of Bernanke. Here's the thing, iPod Touch, the real story is the one that we are focused on. The real story is the one that traders are reacting to. We trade reactions, right? So while there might be a much larger narrative, sometimes those large narratives, like you're pointing out, play out on a weekly time frame or a monthly. But we, as a group of traders, the entire community, the retail trading community, and frankly, even beyond that, we trade whatever is near term. I mean, that's the world we live in now. So while there might be larger narratives, that's not going to help us for a day trade. That's probably not going to help us on an intraday time frame. But if you stretch that narrative out to a weekly or monthly, I'm not disagreeing at all. All I'm saying is, unless that's what we're thinking about right now, that's not what is propelling price action higher or lower. Look at the 8:30 data, right? At 8:30, what were we thinking about? ZERP? Nope. We were thinking about the initial claims number and how that maps to Jerome Powell's next decision in July. It's become very near term. It's become very myopic in terms of what we react to. So we can take short-term narratives like hot zones, and we can take long-term narratives like what you mentioned there, but they're going to be applied to different time frames. That's been my experience, looking at all the different narratives that are out there. It's not a matter of whether it's true or whether it's false. It's whether or not we think it's real. And I was on Benzinga last week, right? And one of the hosts was talking about shrinkflation, right? And how the numbers aren't real and they're not reflecting the fact that we're paying more for smaller size goods. And while all of that is true, and the Bureau of Labor Statistics is completely ignoring it, it doesn't matter unless we actually are reacting to it. So I was mentioning to that host, I said, look, we've chosen to take the blue pill and we trade the data that we have. Whether or not it's true or real doesn't matter. It's what we're reacting to. And that's a tough way to look at it. Yeah. Let's see. Next up is, what are the numbers, Eric? 21K 3D on that slow stochastic. Yeah, that's all it is. It's a slow stochastic. Make sure you choose exponential. And that's what I'm setting up. Let's see. Eric says, export your workspace or share the code. Eric, I share this with members. I've given you the code. I believe it's in the room drive of the room that you're in, although I don't know that I share that in the free training room. I don't believe it is in there, although I don't know. But that's the setting. You can set that up there. Okay. Let's see here. I'm actually looking right now. All right. So yeah, if you're in the mastery, I think the futures room, I think I have a version of it in the options room. So yes, but again, slow stochastic 21K 3D. I think we've mentioned that a few times. Okay, so moving on. Let's see, XLI. Hey there, Christian. I'm long from 103. Nice. Let's see, I'm long 103. Oh, puts. Okay. But down about 30% from the entry price. So Christian, I don't want to be salt in a wound. I don't want to be pebble in a shoe. That's an uptrend. There's no daily time frame. And so the time frame does matter. So when we are talking setups, and remember, gang, I don't know what the setup is that you're looking at. And I have no business telling you if it's good or bad, unless I have a little bit more detail. If you're looking at a short, I don't have a setup for that. Yeah, I don't have a setup for that on my charts. At all. 103 is support for me. Actually, 103.45 is support for me, right? So if I'm gonna be looking for a short, let me give you a for instance. It would be something along the lines of price action trading up into one of these gold zones on my hourly or my daily, right? But I'm actually not, by my rules, right? I'm not even allowed to short. So definitely, I probably am not going to be helpful here in terms of what I'm seeing because the set of rules and targets and strategies you're using aren't applicable to what my tools allow. So I don't have a short, and I haven't actually been allowed to even consider a short since the 14th of the month. You see how the trend goes green on that daily time frame chart over to the right on my screen here? I'm not even allowed to short. I'm only allowed to buy. Right. So my thoughts are if structure dictates strategy, there's no short for me, my friend. Maybe on the intraday time frame, maybe we reach say 105.45 today, and it could be an overbought short. But right now, I don't have any insight into a 103 put. And if it's an out of the money put and we get a sell off, and that's another thing I don't do. Um, I go, oh gosh, time check. Oh my gosh, it's 27 minutes after the hour. Thank you. Yeah, Trish just said, Rog, am I losing my mind or is it time check? Yeah, sorry, gang. Yeah, I rolled way over. All right, yeah, let me get going, gang. My bad. I apologize. Um, I apologize. I will see you all tomorrow. Be good to each other.